That's how people get to zero. Like everybody that's in real estate can get to zero just because if they make, say they're a doctor and they're making $1 million in revenue in W-2 income or in business income, and now they're like, okay, how can I pay zero taxes on that $1 million? Go invest $4 million, and you don't even have to invest, right? You just need a loan, but go and buy $4 million worth of short-term rental, and now you can get to zero. Manage it through December 31st and then turn it over to a management company on January 1st.
Welcome to the Real Freedom Show, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Hello, everybody. Welcome to another episode of Real Freedom, Real Estate Leverage Freedom, where we talk about different ways that you can build time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. If you want to get started on your real estate investing journey, check out our website, freedomthroughrealestate.com. That's freedomthroughrealestate.com. We've got lots of great content, all of our episodes, and ways for you to determine what's going to be your next best path. If you're considering getting into real estate, doing something different in real estate, there's so many fun things that you can do, and we want to be here and be a resource for you. Today is just an amazing topic. Exciting for me. I love talking about this stuff. My birthday's in March. When I worked at my W-2 job, I would take the day of my birthday off of work to go have my tax appointment done, because I like the finality of being done with that. But we're here to talk about taxes today. And so a lot of times people are thinking about other things inside of real estate, and we totally blow over the amazing opportunities of understanding tax laws and tax codes and how much money it can save you and put back into your business. So today we've got Carlotta Thompson here. She's founder and CEO of Tax Strategists of America, and she enjoyed being interested in the IRS starting at the age of 14, started studying tax law, got her dream job with the IRS, and realized that they are kind of not in favor of who she was hoping that they'd be in favor of, which was the business owner. And so now your focus is really helping people on understanding taxes, saving money, and being able to pay the least amount of taxes as humanly possible. So we're so excited to have you on the show and share your story. Thank you.
Thanks so much for having me here. And yeah, taxes is something that really no one should pay if they're actually doing something good for the economy. So think about this. If you are investing in real estate, you can always pay zero taxes. All you have to do is know exactly what to do in order to get that taxable income to zero. So if you have a W-2 job and you're making good money, you can always get that down to zero just by investing in real estate. So it is one of the only ways to actually get to zero is investing in real estate. So I'm excited to go over that today and tell you guys all the things that I know about real estate. Obviously, you already said I started studying tax law at 14. I was an IRS agent, and I thought I was going to the IRS to like change the world. Okay, I thought that, or at least the U.S. I thought that I was going to be able to help business owners and real estate investors through the IRS. And I realized very quickly that was not going to be my job. My job was to audit these people. And so what I would do is I was a very good auditor. So I always gave the taxpayer a large tax bill because I was very good at my job, meaning I understand taxes and I understand what the client is supposed to have. And so bad for the taxpayer that I was good at my job at the IRS. But what I did every time I gave a big tax bill, I would also give them tax strategy and say, look, this is what you need to do in the future so you don't have a taxable in the future. And so it was a double-edged sword, but I always wanted to make sure that the taxpayer, when they were paying that bill to the IRS, they felt like it was more of a consulting fee, and that what they really got out of it was some good strategy that they could use in the future. Because remember, our tax code is not created by the IRS. It was created by Congress, and Congress, all they want for us is to make sure that we are investing back in our economy. So if you are here and you are providing jobs for the economy, you're providing housing, which is real estate investors, right? Or you're providing other opportunities for other Americans, there are ways to get to zero. Because remember, Congress doesn't really care about you. They care about the people who are giving money to them, which are the really big real estate investors and the really big business owners. You're just a byproduct of that. So today, what I'm going to do is tell you what the billionaires are doing. You can do the exact same thing. And remember, the reason why these laws are here is because the billionaires support congressmen, and congressmen make the tax laws.
And I understand for some people, taxes, it feels like something they don't understand. But just like any subject, you have to learn at least the basics, and then you're going to learn more to get better. And so if you're running a business, there's a lot of basic things that you need to know to be able to operate your business and be more successful in it. But I know so many times people just judge their tax person. This is like nails on the chalkboard for you, but judge their tax person like, oh, I got a rebate, so they did a good job for me. Right? And it's like it
Yeah.
doesn't matter. Doing a good job isn't depending on whether you get a refund or not, right? Because a lot of you are withholding taxes, right? And so if you just withheld the right amount or the wrong amount, that would dictate whether or not you got a rebate or not.
Right. You need to be adding lines 18 and 23 on your federal tax return, and that'll tell you if you're paying taxes or not. Lines 18 and 23. That's really what you need to be looking at. Add those two lines together, and that will tell you how good of a job that your tax professional is doing.
And to your point, you mentioned about strategy, right? So it's not just what happened last year in arrears, but it's what can we do to put ourselves in a position to continue to do well in the future. And so as people get more and more sophisticated in the businesses that they own or what they're doing or what real estate that they're investing in, that strategy is key. So yeah, why don't you just kind of dig in and get started and talk about some of your key topics and talking points that you like to make sure that real estate investors need to know.
Yeah, so remember in real estate investing, first of all, there are two different kind of real estate investors. One that qualifies as a real estate pro and one that does not, right? And what's the difference? Well, you have to have 750 hours in real estate related services to qualify as a real estate pro. Now, I assume probably 50% of the audience is a real estate pro and 50% is not. So, tip number one, being a real estate pro is the most highly audited thing on a tax return. So, make sure if you're not like a real estate agent or you're not a construction contractor, something like that, that's like a job in real estate, there you're actually using something like Reps Tracker, REPSTRACKER. That is going to help you be able to determine the number of hours that you spend in real estate. So, tip number one, hands down, real estate, being a real estate pro is the number one thing that I've seen audited on tax returns. So make sure that you have your 750 hours in if you're going to claim to be one. On the flip side, if you're not a real estate pro, that's totally okay. The only difference is if you're not a real estate pro, we need to really focus on short-term rentals that you actively manage versus everyone else can do short-term, long-term, or syndications. So that's step number one. Make sure that you're investing in the right kind of property for your situation. Now, everyone on here can get to zero taxes by doing one thing. If your taxable income is $100,000, say you make $100,000 in wages or $100,000 in a business, you can get to zero by spending $400,000 in real estate for every $100,000 in taxable income. What? How does that work? Well, like you had mentioned earlier today, cost segregation is what we do to get the largest amount of tax deductions for any kind of real estate we purchase. And it's usually a 4-to-1 scenario. So if I spend 400,000 for every 100,000 in real estate, then I'm going to be able to get to zero by simply doing a cost segregation. All right. Number two, the biggest reason why we want to be in real estate is because it has the best scenario for not paying taxes when you leave the money at the end of life. Okay, so think about this. Every other time that you leave something to someone, it may be a large taxable situation, but when you leave real estate, your heirs get a step up in basis. So say you paid $100,000 for a property and you've deducted that over your lifetime. It's now the basis of that is zero and it's worth $1 million. If you leave that to your heir up on death, it cannot go beforehand, up on death, and say it's worth $1 million now, that heir now gets to do a cost segregation on that $1 million and they get to deduct that over their lifetime. So that is a huge key factor. So if you have someone who's leaving you real estate, make sure they do it up on death and not before. A lot of times older people will try to transfer their property beforehand so that they can get on Medicaid or they can or whatever so they don't lose it to Medicaid if they have to go into a nursing home or something like that. Usually, if they're worried about that, the insurance that they can get for long-term care is going to be cheaper than the taxes you would pay if they wait to leave that to you until death. Okay, so that's number two. Number three, when you are buying a property, I want you to be looking at if it's in an opportunity zone. And if it is, you need to make sure that you set up an opportunity zone fund before you purchase that real estate, because there are some great tax incentives. And a lot of times you will be surprised where the opportunity zones are. Like, we have an opportunity zone right next to us. It's a great place for rental property. It's a college town and it's an opportunity zone, which is crazy to me. So make sure that you always check and you know where the opportunity zones are, and that you are setting up your property beforehand, like before you purchase it, to go into the fund. And it's self-certification. It's not hard. You don't need anything special, but you do have to do that before you purchase the property. So make sure that you're watching out for opportunity zone funds when you're doing real estate. Um, there are so many things that you can do with real estate. So cost segregation, step up in basis, OZ funds, opportunity, anything in the opportunity zones. But also, when you start looking at purchasing property, you need to look at your exit strategies. So this could be things like exchanges, where you're exchanging one property for another. But as you are growing and you're trying to make money into this, you really need to determine what your exit strategy is going to be on each of those properties, and then how you're going to offset the taxes. Because everyone loves to be a real estate investor, and then they start selling off their properties and they don't know what their next step is. And a lot of times they don't even think about strategy until after the fact. And that is not a smart way to do things. So when you are exchanging, you can exchange into other properties. We obviously know that, but you can also do some OZ funds that are publicly traded or that are syndicated as well. So you can transfer, you can trade into those kinds of funds so that you can not pay the capital gains tax. All right. Another thing, look at what your capital gains is actually going to be. I have a client that just sold some real estate, and we did it in a year where she didn't have a lot of other income, and so she really, the only income she had was her capital gains. And because your capital gains are at a 0% rate up to a certain portion, she didn't have to pay taxes on any of that. So when you're looking at when to offload your properties, if you are doing a lot of stuff in real estate, make sure that you're timing those where you cannot pay any taxes at all, and not because you traded it, but because you're in a low enough bracket where your capital gains are actually zero. So this is for the real estate investors, and that's what they're doing. They're investing in real estate, and they're landlords, or they're in a syndication, something like that. But I want to talk on the flip side, because obviously in real estate, we have the people who are in the investment side, but then we also have the people who are in the flipping, wholesaling, that kind of situation. And I assume we have a lot of listeners here that's their focus. And because usually when you're a real estate investor, you do kind of both, right? You'll have some deals where you're the landlord or you're in a syndication, but then you'll have other deals where you're flipping or you're wholesaling. And remember, they're two totally different things. So when you're flipping and wholesaling, that's actually a business. And you use all the same strategies as a business owner would use. So we can get into that if we want to, but that is what I'm going to say is the biggest things that I can think of for just plain real estate investors, is obviously knowing the things that are just focused for real estate. And then remember, if you're doing trainings or you're doing any of those things, you can also put those in. Another key thing that I always see real estate investors miss is they don't have a home office. You need a home office when you are in real estate, because otherwise, when you travel to all of those properties, it is a commuting expense. So always have a home office if you are in real estate, because otherwise the IRS will say, hey, when you go to all those different houses, that's not deductible, it's commuting. So make sure you have a home office.
Are you looking to get started or scale in real estate investing but don't know your next step? Are you overwhelmed thinking about finding deals, analyzing deals, doing due diligence, and managing properties on top of it? Go ahead and push the easy button and invest with us. Real estate investing is what we do full time. We've done dozens of deals with hundreds of doors. We have the knowledge and experience to handpick the best deals that most investors can't find. We've got large off-market deals all the time where you can hopefully find returns and economies of scale that you just can't find on your own. The best thing is it's 100% passive to you for less capital than you put down trying to acquire a property on your own. Don't let this year go by where you don't make the leap, add to your portfolio, or you just sit in analysis by paralysis. To find out more, visit freedomthroughrealestate.com and click on invest. You can book a call and learn more there. So get to scaling your portfolio now with us by your side. Can you just quick explain for people that haven't heard of cost segregation study, just quick break that down of what that is and why it's so important for investors?
All right, so as you know, every house you purchase is depreciated. And what's a simple term for depreciation? It just means that we're spreading the cost of our real estate over 27 and a half years if it's long term, 39 years if it's short term rental. All right, so essentially, if you buy a house that's $100,000 and you rent it out short term, you will get to spread that 100,000 over 27 and a half years, and you will take a little bit of that expense every year, which is really cool because it is the only thing you actually get to depreciate or deduct expense for that's actually going up in value, which is unheard of in taxes, right? So that's why we love real estate as well. But when you do a cost segregation, what it does is it takes that property and instead of flat line, straight lining, dividing it over 27 and a half or 39 years, it takes a portion of that and it says, okay, this property has this much that should be 5 years, this much that should be 15 years, this much that should be 27 and a half years, this much that should be 39 years. And everything that is 15-year or below, you get to deduct that the first year at 100%. And that's usually going to amount to about 25% of the purchase price less land value. So usually about 25%, because remember, land, you don't get any expense for that. You only get expense for the house, the structures that are on the property. So 25% is usually the ratio. And then the rest of the 75% is deducted over the 27 and a half or 39 years.
And for people, like, it's hard to understand how impactful that is. But as somebody that's now been doing that for the last couple of years, like that is so huge. It makes such a big difference and really frees up more cash to be able to continue to invest in real estate and keep that snowball going.
Well, and that's how people get to zero. Like everybody that's in real estate can get to zero just because if they make, say they're a doctor and they're making $1 million in revenue in W-2 income or in business income, and now they're like, okay, how can I pay zero taxes on that $1 million? Go invest $4 million and you don't even have to invest, right? You just need a loan, but go and buy $4 million worth of short-term rental and now you can get to zero. Manage it through December 31st and then turn it over to a management company on January 1st.
It's amazing. And I think because people don't understand taxes very well, they don't lean into this stuff, right? And so it's, you're giving away tens of thousands of dollars of value here. And, people will probably listen to that and be like, oh, that was an interesting podcast episode. Or, oh, they talked about taxes. I'm going to go listen to something else, right? And it's like, there is so much value here that you guys are just leaving money on the table by not figuring out how to implement these strategies.
Well, because think about it. If you're a doctor and you're making $1 million, you're probably paying $300,000 to $400,000 in taxes, maybe $500,000 if you live in California. What if you could just keep that money and go invest it in real estate instead of giving it to the government? That's the impact. It's not that you don't have to pay, it's the impact of what your wealth can do for you that is so impactful. Like, think about this. I mean, as we're adults, we just have come to think, oh, taxes is just going to be something we do. That's actually why I start teaching kids at 7 years old about buying businesses and buying real estate. And I teach them, like, okay, what's going to get your Airbnb value up? What's going to get this stuff? But at 7 years old, because if not, when you're 18, you become so indoctrinated to the tax system that you can't think outside the box of like, okay, what are the billionaires doing to not pay taxes? And I don't care if you like our president or you hate him. A few years ago, when he was running against Hillary Clinton, what did he say? He said not paying taxes makes him smart. So if a billionaire can not pay taxes, yet you're over here making $1 million and you're paying 500,000 in taxes, we clearly know that the problem is not the tax system. The problem is you are not making sure that you have the education to not pay taxes. And then you're teaching your kids, oh, go be a lawyer or a doctor. Why? So they can pay more taxes than anyone else in the country? Have them get into real estate. It is the number one way to grow your wealth tax free.
Or if you want to be a doctor and a lawyer, great, and go buy real estate,
Yeah,
right?
exactly.
Find leverage through other people to help you buy real estate if you're really passionate about doing those things. And I think, yeah, to your point, when I hear something like that, yeah, my brain goes towards, well, if they can do it, I can do it too, right? And so it's just figuring out, how do you get started? How do you do something in real estate? And I just had a conversation today with somebody where we were talking about buying an investment property. And I said, at some point you have to take that risk. And once you do that, like, then you can go figure out how to problem solve that. You can realize if it was a good risk or not, but you're not going to know as long as you're sitting on the sidelines. And over the last couple of years now, doing more real estate investing, I've been able to see the power of taxes, or lack of taxes in that case, because I'm investing in real estate. And so if you're listening to this and you haven't gotten started, figure out a way to get started so that you can be on this side of the conversation.
Right. Most people that are in real estate never pay taxes. Like, I can't even do tax strategy for them because they're not even paying taxes, right? Because they're doing so much with real estate already, they don't need any tax strategy. But when I'm talking to a business owner or a W-2 employee and they haven't done real estate, I'm trying to, get them over to real estate. And for some reason, people don't look, they hear about, oh, well, you don't want to have to deal with a tenant or whatever. That's what your management company is for, right? Like, yes, you need to manage that through December 31st of the year you buy it so you can get all the tax benefits. But after that, turn that sucker over to a real estate management company and don't think about it. Or do a syndication, right? You don't have to do everything yourself. But I think real estate has gotten a bad reputation, which is so crazy to me because it is the easiest way to not pay taxes in the US.
So talk a little bit more about Tax Strategists of America, what you do, and how you're helping people.
Yeah, so we help people pay zero taxes, and you can always get to zero taxes through two ways: real estate and business acquisitions. And if you think real estate acquisitions is scary, then don't even look at business acquisitions because it is a little bit harder. But either way, you can get to zero with those two things. Now, before we ever get to those two things, though, we've got to make sure that you're doing all your personal strategies, all the business strategies, all the real estate strategies that you already qualify for, because that's money that's just sitting out there that you just don't even know about because you're not doing those strategies. So, first of all, we put people through the personal strategies, business strategies, real estate strategies on things you already own. Okay, so we're not going to tell you to go buy more real estate, go buy more businesses when you aren't even doing strategy on the things you already have. And that is what Tax Strategists of America does. We're making sure that anything that you already qualify for, your accountant's probably leaving it on the table because they don't even know you qualify for it. Um, Accountants are really good at putting things into a computer system and spitting out a tax return. They're not great at things that they don't understand. So make sure if you're working with a strategist that they personally are into real estate, right? We own 42 doors, and we've been doing real estate longer than I've been doing this business, right? Because I started it when I was at the IRS. And then make sure that they're actual business owners and they're not just accountants, okay? Because accountants don't really understand tax strategy. Entrepreneurs do because they realize like that is the biggest tax they're paying, which is so crazy to me, right? Because you would expect your accountant to understand tax strategy, but they don't. And I don't know if I know they're not taught it in school. So it's something that they have to kind of grow on their own. When I was at the IRS, every situation I looked at, I determined, okay, what would get this IRS uh, bill to zero? Every time I was looking, every time I audited somebody, I was like, okay, what can they do to get this to zero, or what can they do to maximize their expenses? And I guess it's just the way my brain thought through things. So now I've taken that back down and I've created a pathway to get you to zero taxes. And so the shortcut: invest for every dollar that you make in income, invest four into real estate, and you'll always be at zero and you won't need anything else. But if you're wondering what all money you're leaving on the table, and you're wondering all the strategies that you could do right now that don't cost you anything to invest, then definitely look at the Pathway to Zero. Come to one of our trainings, and I promise you it will be the most you've learned in 2 hours in your entire life.
Well, we were just talking offline beforehand because you mentioned about how all accountants aren't necessarily good tax strategists. It's kind of similar. real estate agents aren't necessarily investors, right? Even
Right.
though they're in the same space, they don't understand the opportunity with investment. And so, that's where it's just a different type of personality or a different type of passion, because I talk to real estate agents all the time and they don't know how to analyze a deal to tell if it's a good investment or not, but yet they can sell a home really well and help a client buy a home really well, not necessarily an investment property. Real quick before we go, just because we do have a segment of the population that, maybe are agents and are working to get towards investors, maybe just some quick tips or some thoughts of things that people can do tax-wise with where they're at as they then focus on going to invest in real estate and take your advice.
Yeah, so I'm going to say this segment will be for all real estate agents, anybody that has a business whatsoever, every 1099 contractor, everybody that's flipping houses, and everybody that's wholesaling. Listen to this part because this is going to be, you're a business, okay? Your focus needs to be on business strategies and business deductions. So what are some things that you guys are missing that you could be doing? Obviously, you need to make sure that you're hitting the basic strategies. Pay your kids, figure out a way to have your kids working in that business. I mean, it's very easy for real estate agents. They can have their kids in a video showing a home or doing a little thing on TikTok or something like that. Get your kids working in the business. Everybody makes $40,000 a year. Your kids can work in your business, pay them for their name, image, and likeness. Also, they could be running your social media, things like that, but pay your kids. The reason why is because this is money that you're already spending on your kids. So put it in their bank account, pay for their daycare, pay for their clothes. You can't pay for household expenses out of there, but you can pay for their personal expenses. So always make sure you're paying your kids. Always make sure you're doing the Augusta rule. So the Augusta rule is where you rent your home to yourself for 14 days a year. You rent it to the business for 14 days a year. And it's a tax deduction of the business, tax-free income to you. So this is a business deduction and you don't have to pay any taxes on it. Like you're just shifting money from one thing to the other. And that's what tax strategy is for the most part until you get into real estate investing and business acquisitions. Tax strategy should not cost you anything to it shouldn't be an expense. It shouldn't be like think about this. Most strategists or most accountants, when they're doing strategy, they go tell their client to go buy a car or go buy something they don't really need in order to not pay taxes. I'm going to say that's terrible tax strategy. That's lazy tax strategy. The tax strategy that you should be doing are the things that don't cost you anything extra, right? It's just moving money from one place to the other. So make sure that you're doing those things. QBI maximization. Make sure you're becoming an S corporation whenever you need to become an S corporation. That can save you lots of money. A real estate agent can save probably $10,000 becoming an S corp and doing reasonable comp. But also, if you're really good at your job, a real estate agent may a QBI maximization could save you up to $150,000 in taxes. So just knowing the basic strategies, and again, those are some I'm throwing out at you. We go over lots of strategies on our call that's 2 hours. Oh, also, you know what I forgot about? When you are in real estate and you are, or if you're a regular business owner and you're doing anything on a property that makes it easier for somebody that's disabled to use it, did you know you can get a credit for that? So if you're doing, and we just on our real estate office, we just made a wheelchair ramp. That's all deductible. That's a credit. There's a credit. It's not a deduction. It's an actual credit that the government paid me for creating that ramp. So don't forget those things. That's another thing that I forgot whenever I was going through the real estate section. But bottom line, know your strategies, do your strategies, and if you don't know them, come learn about them because sometimes it's just a little tweak that can save you 10, 15, $100,000.
That's awesome. You're just tossing gold nuggets out here left and right. And for people listening to that, like there's tons of value, like you said, tens of thousands of dollars. We talk about like, oh, try to save some money. Let's not go to Starbucks once a week and save ourselves
Oh, that's
$5,
never going
right?
to get you anywhere.
Right. That's like little grains of sand, and you're tossing out gold nuggets here. So obviously, if you're listening to this, take some time, understand tax strategy, get educated on that so that you can put yourself into a position to, yeah, save so much money on taxes. So thank you so much for coming and sharing just such an awesome wealth of knowledge. And so thank you for what you're doing. Where can people go check you out to be able to learn more?
You'll have a link in your show notes for the next training. Also, you can go to Tax Strategists of America. You can find me on any social media that is just put in Carlotta Thompson. My name is super rare. So if it's talking about finance, hey, that's me. And I'm on TikTok, Instagram, Facebook, everywhere. But every place you find me, there will be a link to my next training, which is where I go over tax strategies. And I promise you, Our training, it's not a sales pitch. It is 2 hours of gold. You will leave there knowing more strategy than you probably ever wanted to know. I always tell people I sent my daughter to college for accounting, and she tells me, she's like, Mom, you teach more in that 2 hours than I've learned in 2 years of accounting classes. So come learn and let's start strategizing.
Awesome. Well, thank you so much for coming on, sharing. Yeah, go check out the website, go check her out, and best of luck to you, Carlotta, in the future.